everyone, and welcome to the Sani-time question. This question is going to focus on the Companies Act, King, Psycho Code of Professional Conduct, and the Auditing Profession Act. Guys, I'm going to approach this question as you should in attempting any question and how you will in your tests and exams, because you won't have the required initially. So we're going to take the 12 minutes to read through the scenario. Make the notes of what you should pick up when you see these points, as I am going to do. And guys, if you have done this question already and didn't make these notes, you need to write them down somewhere so that you know when you see this point, I need to make this shorthand note, because that's what's going to help you when you get to your required. Okay, so we'll take the 12 minutes, make those notes, and then we'll get to the required, and you'll see how the notes we make will be used when we start to answer the questions. Okay, so Sani-time Pty Limited, herein referred to as Sani-time, is the most established and largest tour operator of the Sani district, based in Underberg in the southern Drakensberg. So now I understand the industry. They are a tour operator. They'll have to comply with the travel industry requirements. Sani-time offers a variety of tours to the Lesotho border, all of which traverse the slopes of the legendary Sani Pass. Sani-time was established in 2008, so I can see they've been around for quite some time. I just make a note here, established, because if they've been around for so many years, they're obviously doing okay. After Mo Salah ventured up the Sani Pass solo in his 4x4. He faced treacherous conditions that only a 4x4 would handle, and right through his journey, all he could think about was opening this iconic gravel pass up to the world. Mo Salah recruited a team of adventurers, all with a passion for the Sani Pass. The team were required to study the Sani Pass, take advanced driving and first aid courses, and to set up camp at the then newly purchased Sani-time bakery at the top of the Sani Pass for a year. So you can see just an idea of what their team had to do in order to be able to operate. It's almost like putting down some of the requirements. This training would produce highly experienced guides with experience in all year-round weather conditions that are able to traverse the Sani Pass with passengers on a daily basis. As soon as the team had taken their first paying customers up the Sani Pass, the news of this epic adventure spread like wildfire, and Sani-time was in business. Now you start to see how they make their money. Sani-time's fleet consists only of 4x4 vehicles. So I can see here they've got a fleet of vehicles. So just an idea about certain fixed assets that they have. And now any risks with regards to the IFRS requirements for recording these assets become something I consider. The majority of these vehicles are owned by Sani-time, with the rest financed through Mula Bank, Sani-time's bank. So now just make a note here. Owned versus lease. Because there's different requirements for accounting for these vehicles, and this becomes a risk here, that they might account for a vehicle as it's owned when in fact it's financed through Mula. It actually belongs to Mula. So this is going to be, with regards to your fixed assets, a bit of a risk on how it has been recorded. These vehicles are of utmost importance, as tourist safety and comfort are the cornerstones of Sani-time's business. So now you also start to get an idea of some regulations that they're going to have to comply with. Measures are taken to ensure that both are met on a daily basis, as the road up the Sani Pass can be rather bumpy at times. The company focuses on all size groups of people. Individual attention to the many different highlights of the tour is prioritized. The history of the pass is but one facet, with birding, plants, animals, and sometimes reptiles also making an appearance. The tour's purpose is not only that of getting to the highest bakery in Africa, but to make the journey there and back a most educational and memorable one. Understanding the entity. Sani-time is led by Mo Salah, the Chief Executive Officer. So now I get to understand, here's one of the directors. He was also the person who incorporated the company. Mo's second in command is Paul Pogger, CASA Financial Director. I see this, CASA, and I immediately note here CPC, because any CASA needs to comply with the CPC. Paul leads the small finance team of 3 people. So now I get an idea of the size of their team. Paul Pogger joined Sani-time as a junior accountant straight out of his articles 10 years ago. So you can see he's been with the company for 10 years. Through hard work and determination, he worked his way into the financial director position 5 years ago and continues to thrive in this position. Paul dedicates all his working hours to Sani-time, and in his personal time holds a non-executive director position in Household Bottles Pty Limited. So I'm given some information about Paul. What do? I immediately write here, Paul, and I go FD of Sani-time and non-executive director of Household Bottles. So I've got this already highlighted for me. Why is that important? Because they've shown me that this person has another role somewhere. So I need to make sure that I remember this. What I'm also going to note here is per king. Is that okay for him to be an executive director somewhere and a non-executive director somewhere else? It is okay, but I just note the legislation or regulation that gives me a little bit of guidance there. Christine Ronaldo rounds up the executive directors as the marketing director. So if this person rounds up the executives, it means the executives are a CEO, a financial director, and a marketing director. Christine is solely responsible for developing and implementing marketing and advertising campaigns, keeping up to date with social media advancements, and ensuring all of Sani-time's social media platforms are maintained and managed. Christine has been part of the Sani-time team since 2009, so she's also been there for quite a lot of time. Operations. Sani-time is slowly recovering from the massive dive in sales over the 2021 and 2022 financial periods due to the restrictions placed on the travel and tourism industry. So a massive dive in sales, I'm just going to make a note here, that's a bit of a risk with regards to going concern. If they've had this massive dive over 2 years, is there a concern that they might not be able to continue? And at this point, the work that we've covered that mentions monitoring going concern, Companies Act, and King, both have requirements that you monitor the going concern ability of the business. In March 2022, Mo sent an email to all staff inviting anyone to propose a new business case to keep the business functioning as a going concern. So another risk here, you need to have a new business case in order to continue. So a risk here with regards to the going concern. Financial statement level risk, I note that. Appreciate we're going to be getting into that a little bit later. Mo received many proposals, but it wasn't until a board meeting in June 2022 that Mo felt inspired. Minutes of the June 2022 board meeting can be found below. So we've got minutes of directors board meeting held in June 2022. Directors in attendance, Mo Salah, I know this is the CEO. Paul Pogger, I know he's the financial director, and I also know he is a CASA. I had already noted that. Christine Ronaldo, the marketing director, chairman of the board. So already I write a non-compliance with King. Chair is not independent non-executive director. Lindiwe Messi, CASA, so once again I note CPC because Lindiwe has to comply with it as a CASA. independent non-executive director. So what I can see here, I've got non-compliance because the chair is not independent non-executive. I've also got non-compliance because there's no lead mentioned. And then I look at the board structure and I can see I've got 1, 2, 3 executives. So I go executives, 3 to 1 non-executive. So I've got non-compliance with King there because the majority are not non-executive. And then who's independent? Of my non-executives, I look at independence and 1, so they do meet that criteria there. Majority of non-executives are independent because the only non-executive is independent. Paul presented a new business case to the board of directors. He pitched a trail running race that would take place within the southern area of the Maluti-Drakensberg World Heritage Site, where large swaths of this iconic wilderness would be traversed. He presented his forecast of revenue to be generated through the sale of race tickets, which showed there would be sufficient revenue to not only continue as a going concern, but thrive as a going concern. When he was questioned about why people would spend so much money on a ticket to this race, he noted that the race would be the first ever environmentally friendly race. This means all water supplied along the route would be in biodegradable, sustainably sourced, eco-friendly water bottles. Mo and Christine agreed that they would be crazy not to explore this idea, as they already have the necessary trained staff for an event like this. Lindiwe questioned what the associated costs would be. Paul noted that the major cost would be the specific water bottles required in order to claim the title of the first environmentally friendly race. He noted that they would need to secure a supplier of these biodegradable, sustainably sourced, eco-friendly water bottles. Paul proposed using Household Bottles, Pty Limited, a company that specializes in the manufacture of bottles. So now I go, where have I seen this before? Because I know I have. So I come up, oh, here it is. What did I note about it? Paul was a non-executive director of Household Bottles. Okay, so Paul has proposed using Household Bottles. And so I just need to make a note here that he's got a director with a financial interest. Using Section 75 of your Companies Act. Using a company that the current company's director is a director of would be an interest for Paul. Paul informed the board that he would be able to secure preferential prices for the bottles because he was a great negotiator, not because he has an interest. So now I've got non-compliance here because he is not disclosed his interest. There's also non-compliance with the King Code here, which requires that directors' interests be disclosed. All 4 directors of the board voted in favor of Paul signing a long-term contract with Household Bottles. All 4, there are only 4, so he also, not only did he not disclose, he also voted, which is non-compliance with the Companies Act 2. He should not have voted on this decision after disclosing the details. Other matters. Before I move on, as soon as I've got non-compliance with King and non-compliance with Companies Act, we need to make a note here. We've got non-compliance with King in terms of laws and regulations. And who is responsible for this? It is the directors. So I'm now also going to make a note here, Companies Act and King, directors' conduct. With a cross there, there's a concern with that. So now we move on, other matters. In August 2022, Sani-time made the decision to upgrade their bakery building to an environmentally friendly building. The building was originally constructed in 2007. Sani-time had incurred the following costs by 28 February 2023. Conversion costs: solar panels generating electricity from photovoltaic solar energy not exceeding 1 megawatt to reduce electricity from Eskom, 320,000. Water saving system to replace old leaking water system and ensure the maximum conversion of water, 250. Reorientation of doors and windows to ensure optimal use of natural light, 125. Installation of insulation material in ceilings to reduce heat convection and radiation, 180,000, and installation of an energy efficient lighting system to replace the current system, which while still in working condition was wasteful, 100,000. Total cost 980,000. The solar panels are the only removable alterations. The upgrade was done to ensure that the building is more marketable, and as an additional benefit, the alterations improved the industrial capacity of the building. After the upgrade was completed, it was leased in terms of an operating lease agreement for 20 years from 1 January 2023. The leasee intends to use the building in a process of manufacture recognized by the Commissioner of the South African Revenue Service, SARS, as such. So I've now got another consideration in terms of my IFRS accounting for the lease of the building, which initially had been used as a bakery for the company. They also now mention in a process of manufacture and SARS, and now I'm starting to consider what are the tax consequences here. These expenditures were correctly accounted for in the financial statements. Okay, so I don't have a concern with the IFRS requirements. They've adhered to those. Although an IFRS expert confirmed that this was the correct accounting treatment, Paul asked the accountant to deduct the entire amount of 980,000 as repairs incurred in the production of income during the current year of assessment when determining taxable income. Now, everything I can see from above, it was a manufacturing building itself because a bakery is considered a manufacturing building. They then made capital alterations to this building, most of which are not removable. And then they've leased it out as a manufacturing process. So this is not repairs in the production of income. And so Paul, who we know is a CASA, asking an accountant to avoid the correct tax treatment is a concern in terms of the CPC. He has a threat, self-interest threat, because of the proper accounting not being adhered to, plus also some intimidation maybe to this accountant to misstate what or not account for it the correct way. So we've also got integrity, because we as CASA should not be associated with misleading, false information, and Paul is going to be associated with an incorrect tax return. He's requested the accountant. So I've got quite a few concerns here in terms of the CPC with the accounting, with intimidation, and with integrity, threat to integrity. SARS allows a write-off period of 6 years on air conditioning and heating systems in terms of the Building General Rule number 7. So you can already see 6 years, they're now trying to deduct the entire amount in the current year. So we've got non-compliance with the Tax Act here. And so I can immediately then go and note non-compliance with King and with the Companies Act because of this requirement. I've also got non-compliance, so that's going to be with laws and regulations, and also director's conduct. And I've potentially now got a reportable irregularity in terms of the APA. External auditors. CAC Auditors Inc. were reappointed as the auditors for the third consecutive year at the Sani-time AGM in April 2022. Cassius Clay CASA, so I know chair, CPC, as soon as I see that, was appointed as the new audit partner of the Sani-time audit for the year ended 28 February 2023. Cassius has been appointed the audit partner on numerous clients in the travel and tourism industry. So just lets me know that he's probably got the necessary experience to take on this engagement. Cassius appointed the following team members to be part of the audit team. George Hindman, CASA Audit Manager, so once again CPC. Rhonda Rousey, Senior Audit Clerk. Mark Lewson, Junior Audit Clerk. So I've got an audit team here of 4, if I look at the whole team. Let's have a look at the required.